A very good morning, traders. We made it the day after the budget. The UK is still here, just about. Looking out the window, there's not too many things being set on fire, not too many riots, so we might make it to the weekend. Morning, Kay. How's your bank balance?
Morning, Ryan. I haven't checked yet. I don't dare.
Well, don't drive, don't get a train, don't earn any money, and you'll be all right.
Yeah, that's it, mate. Don't owe anything to anyone, especially not the UK government.
Yeah, I think I'm gonna sell my house and go live in a New Forest as a hermit. Let them catch me there.
Yeah, but
Right.
just in the forest. You're going to a tree house, yeah?
Yeah, exactly. I'm not going to tell you where, because they'll probably tax me for wood or something.
Yeah.
Right. Anyway, we'll get into the budget stuff shortly. Let's get on with the rest of it. But as per usual, I'm just going to let you know about the sale we've got going on the trader funding program. 30% off all plans. Now is a good time to take that because we are going to have a lot of volatility going into the end of the year. So if you want to trade someone else's money or leverage up your own funds into a low risk environment where you can trade a higher amount, higher ammo chest, shall we say, for the end of the year, now's the time to do it. Take advantage of that discount. Use code THANKS2025. The link is in the Zoom chat, or you can find it all over the socials. Right, let's get going. PBOC, they've edged their fixings down. Now we're in the 707s. So this bout of wild strength that we're seeing is still pretty much entrenched. It's still a bit slow going, but the direction looks pretty clear for the moment. Over in Japan, the Ministry of Finance out with a report after meetings with some of their bond lot, says that primary dealers are seeking more 2, 5 and 10-year bond sales, and they want less super long bond sales, which sort of is par for the course because that's what the MOF have decided they're going to do in terms of issuing more shorter end stuff than longer end stuff. So they're coming into line anyway, those dealers. We've had another Bank of Japan bod out. Noguchi says the bank will gradually adjust monetary accommodation if the outlook holds. Says sustainable inflation requires steady demand and sustained nominal wage growth. Says wage gains must persist and broaden into SMEs and regional economies. He did have a little bit of a dovish tilt, saying an early hike would risk achieving the price goal, i.e. if they hike too soon, then that's the end of inflation. Now, the market was a little bit up and down on these comments. It came out early in the morning, about 1 o'clock in the morning our time, and then it came out about 5 o'clock this morning. And these comments, he basically said he had no change of his view since he last spoke in September. He said September guidance still holds and his approach is unchanged, and the timing of the policy adjustment depends on the data. So he's in the camp where, yes, they're moving towards normalising policy or hiking rates, but the market saw that as saying, right, well, hike's still on the cards, but it looks like he won't be voting for a December meeting if his outlook is unchanged for September, because that meant he didn't vote for a hike in October, and he's unlikely to then potentially vote for one in December. So that might be behind why we see a bit of yen recovery this morning, or yen pair recovery this morning after a little blip under 156. Okay, just on all the Japan stuff. End of the day, not real much from new from Gucci, but
Yeah,
bit of fixing last night, maybe end of month fixing
could have been maybe
stock.
next night as well. They're still saying exactly the same thing, right? Yeah, we're going to hike, but it's going to be slow. The interesting thing about the and I've been saying that because I mean this the market or FinTwit or whatever they're always talking about, oh, Japan is going to break the bond system, whatever, because the 20-30 years, but now we have this confirmation, and what I've been saying as well is that they won't go into the ultra long term because, first of all, it's a very small market. It's a much smaller market than the short end, and if you need quite big funding, better do it on the short end because the rates are lower, and wait for an eventual return of the Japanese whales to the long end JGB market to then lengthen maturity. So everything is kind of as planned. The problem is the Bank of Japan is going to take it into account, what the government is doing. So we are still in this snail space hike. I'm still not going to exclude December, but yeah, I don't know if we have another wage report out, a real wages report out before the next meeting. When is the next meeting? 19th of December. Could be that we have another one out.
Yeah.
That would perhaps drag them over the edge because last year was a bit of a surprise hike also in December, and that came on the back of a positive real wages report.
Yeah, I think it might. If they don't hike, I think it'll be a close one. Perhaps I think we might see
Yeah,
a few more stepping
yeah,
over the line. So I think the vote numbers are going to be pretty important in terms of that. But yeah, yeah, they could hike in
yeah.
December. They could hold off and hike in January. We know one's coming. We just and
Yeah,
we know it's
well, I
coming
mean,
soon.
if it's a hold, whatever the votes are, that's still going to keep those yen yields pretty low in the short end. And I wouldn't be surprised if we end the year on highs in all the yen crosses. I don't know about the dollar, but yen crosses could be in for a bit of a run into year end.
Yeah, I'm just thinking now. If they do hold in December,
Mm,
that's probably a rally in yen pairs worth thinking about fading because that will probably put the crosshairs firmly on
yeah,
January.
yeah, but I
Um,
maybe I'd wait until the 31st of December or 2nd of January.
oh yeah, well I wouldn't trade
Yeah.
it over Christmas. I'll give you a clue.
No,
Yeah,
no, because
wait till the year.
the problem is if and yes, the markets are probably going to take a break, but it also means that there is less liquidity by the liquidity providers. So I mean, there's less amounts needed to make those things move, and it's not the first time we see pretty big moves all of a sudden into year end. So a hold still brings us back to bigger budgets and funding needs, right? So
Yeah,
that's still going to weigh on the yen, I would say. But I don't know, right? On the dollar, etc. I don't know what's going to happen, but yen crosses could be in for a bit of a runner.
yeah, and if you're short over that period, you're gonna be sitting doing nothing when paying the money out for
Yeah,
2 weeks or so. So
as
yeah,
well,
but
as well.
keep an eye on it, at least in the new year. But we'll worry about that when we get there. Right, Mr. Hawksby, the RBNZ, at the decision yesterday said that they're in a position. Well, he said at the decision that they're looking at their indicators showing that the economy might have expanded. We got just that with these Q3 retail sales coming in a hefty green number there, 1.9 quarter on quarter. We're expected to rise 0.6, 1.2 for the core sales number there as well. The quarterly sales versus last year or a year ago, up 4.5%. So some really, really healthy numbers there. We had some business confidence numbers out as well from a couple of the banks, which are all positive as well. This one in particular, the highest since December 2024. So looking positive. So he was right. He was also out speaking again, saying, just reaffirming what he already said. We're in a position where we can sort of watch and wait and see how things progress over the course of next year. Says a number of labour indicators are starting to pick up. Repeated again, our indicators are telling us that the economy expanded through the third quarter and the economic recovery is happening right now. Speaking on rates, he said the cash rate was cut a lot, which may make the recovery come faster and stronger, and says the hurdle is high for any further rate cuts. Over at the ECB's Wojcik says for another rate cut, we would have to see the inflation path going down, which points to the forecasts at the December meeting at the ECB when we get those updated forecasts. Some of those dubs, maybe even a few of the middle of the roaders, will be looking at those forecasts to see if there's any worries about inflation that they need to act upon. Right, let's get into the budget crap. I'll try and make this as brief as possible. It started off as a real shit show because someone at the OBR fat-fingered the release of the forecasts, which are basically a review of the entire budget plans. So what usually happens is Reeves stands up and gives out all the details of her budget, mentions some of the forecasts, and then afterwards the OBR released the report. So instead they released it very, very early. So we got the whole budget basically before she uttered a word, which was no bad thing because it means we can only watch her intermittently. Anyway, they cut productivity growth as expected to 1% from 1.3. What was good news for Reeves, and I'll talk about this in a moment, is that her headroom amounted to around 22 billion. So that was a number we were all worried about what that was going to be. Was it going to be smaller than expected or bigger than expected? Bigger being better. So 22 billion is a headroom. The OBR cut growth. Well, 2025 growth they raised to 1.5 from 1%, but we're just about in December, so that doesn't matter. Still means they got it wrong from what they called it in March. 2026 was cut to 1.4% from 1.9. 2027 cut to 1.5 from 1.8. Inflation for 2025 also expected to rise this year, 3.5% from 3.3. Again, numbers that don't matter. They also saw inflation rising in the future. Borrowing, that was projected to fall from 4.5% of GDP to 1.9% of GDP at the end of the forecast period. However, debt to GDP is going to rise from 95% to 96%, which isn't good news. Debt issuance, this is a number a lot of the market watching for to see how much they were going to be doing, so auctions and stuff. So the gross issuance for 2025-26 fiscal year came in at 303.7 billion. That was higher than the prior 299 billion, but lower than expectations of around 308 billion. So that was all sort of fine and dandy. BOE bets have seen odds for the cuts increase at the end of 26. We're now at 68 basis points by the end of next year. It's not a huge amount of change, really. So overall, the main details, there was no income tax hike in the budget, but income threshold levels were held, or tax threshold levels were held. Good news for traders. Spread betting was excluded from UK betting duties. And also electric vehicles are now going to get taxed at 3p per mile, which has kicked off a massive stink because it means some people who decided to go green and get electric vehicles will now be paying more tax than those of us driving the dirty old diesels. So that's what you get for being conscientious, slammed in the pocket. The OBR put out in part of their report a little line that was picked up by someone that there was actually no growth measures in that budget whatsoever. Nothing to get them changing their forecasts or improving what they expect to happen to growth. Well, as you noted from the forecast coming down, but there was nothing in the budget that would boost growth. JP Morgan, Jamie Dimon was out saying that the market should welcome the UK Chancellor's focus on fiscal discipline. Now, that is exactly what the market did initially. As we've been saying all week, what to look out for in this budget, what was going to happen, what the market could have done with it. As you can see, UK yields came down, and as they came down, the pound went up because we were trading the fiscal responsibility, and the market liked that. Okay, we haven't gone on and carried on going, or it's not a huge move in the grand scheme of things when you look at the chart like that, but the heat is off Reeves on that side of things. Now, in the press, they've all been discussing it, what it means for the economy moving forward, and the jury is saying that it's not going to be looking good. So at some point, we're going to switch probably pretty quickly past the fiscal responsibility, and whether the Bank of England's going to have to cut rates and maybe cut faster than they expect. How's the economy going to handle it? What's going to happen to spending, jobs, the whole shebang? And that picture, as you know from watching the Flow show over the last few months, is very bearish. And don't know about UK, but I have seen nothing to change my mind on that aspect.
No, yesterday I was just following the moves and the trends, and if you look at the 10-year JGB and the 10-year, sorry, gilts, and even the shorter one, there was a real yo-yo going on there. And we said on beforehand, we clearly said, I mean, wait maybe until the dust settles, because we could go and have a look at both ends of ranges, and that's, if you talk about euro sterling, that's absolutely exactly what happened. No, there is nothing about growth in there. So we will have to look at what the data are going to tell us. Yeah, in that euro sterling, I think a bit of a stop run, right? Everybody's looking at that 50-65 or so zone in euro sterling. Get a few week longs out of there. No, there is nothing in the longer term that changes my mind. Now, I still think that euro sterling is going to be the cleaner trade, because I'm not sure about the dollar. Well, in a sense that I'm not very hot in starting to sell cable. Let's put it that way. So yeah, euro sterling I think is going to find support sooner rather than later. But we may have to wait, until tomorrow is still a bit of a longish weekend for the US. The US is a big market. Maybe they are going to start really trading gilts again on come Monday, right? And whatever happens today and tomorrow is just going to be further position adjustments, whatever direction they take. But I do think that at some point, even if yields continue to come down, it's going to start to have a bit of an adverse effect on sterling as well. Because the market may start to think about, okay, if yields come back down, it also means that we don't have confidence in growth. So there may be an inflection point coming where lower yields are going to start weighing on sterling, instead of what we are seeing now, the confidence or no confidence vote in gilts.
Yeah, absolutely. When that switch is going to happen, that's the big question.
Yeah.
You
And
know,
it may hit relatively fast all of a sudden if the switch happens, right?
Yeah, I mean, markets, goldfish thinking we're over the budget, it's in the rearview mirror.
Mm,
Markets can change very quickly. But I think
mm.
you're right. I think with this low liquidity, the US holiday, I think we've probably got a couple of sessions, couple of days where we might still see a bit of shaking out. I still think there's a bit of room to see some pound strength.
Yeah,
But yeah,
yeah.
that switch will happen at some point where lower yields is not because of fiscal responsibility. It's now because the market is thinking, yes, growth isn't going to be good, and the BOE are going to have to cut rates. So really, in gilts, all we're trading out is the risk that things could have been worse, pretty much, and that's why we're seeing this positivity in the quid. If we were shooting up here, then the pound would be dumping. So yeah, I think I know you stepped in yesterday. I was a bit hesitant. I was going to, and then I didn't. I think there might be a little bit more room to see the pound
Yeah.
gaining a bit.
But that's why I'm keeping it extremely small.
Yeah,
Just leaving an ample room to add if we see more downside in euro sterling. Also, as said, I'm going to stay away from the cable, because I don't know about the dollar really. Sorry.
I've been how many months since I started trading euro sterling on this budget? July. I'm saying for months I am not going to trade cable over the budget. And what did I do yesterday? I traded cable over the budget, and
A trader will be a
17
trader.
pips.
A trader will be a trader.
Yeah, sometimes.
Yeah, but it's exactly like that, Ryan. I mean, leave it, give it a few days, and then we'll see what happens. I would. Well, we can talk about that next week or so, but I'm wondering if there's anything specific on the calendar for sterling next week. Could not be. Oh, we have money supply, lending numbers. Dinger, Dinger is talking. Yeah, that we know. She's probably going to call for 100 BPs cut. But yeah, a bit of housing pricing. As far as I can see, it's not a big week for sterling data next week.
Apart from final PMIs, yeah, it doesn't look like there's much coming out. But
Yeah.
yeah, we've got BOE's Green speaking today, which okay, they're not going to comment on directly on the budget or politics or anything like that because that's not really their remit. But there is scope to maybe talk about the forecasts or something like that. It might be too early, come the day after. But yeah, BOE members speaking after the budget could be something that we need to pay attention to. As I say,
Remind me which way is she leaning?
Who, Green?
Yeah.
Yeah, I think she's in the middle of the roadish camp. Let me have a quick look.
Yeah, just continue. I'm going to look it up.
Yeah. I'll have a quick look. It says last comment was that monetary policy, not convinced monetary policy is meaningly restrictive in the UK. So probably on the little on the hawkish side. Shall we say, on the undovish side.
She's in one of the pages that I follow. She's rather qualified as a mildly hawkish one.
Yeah, that sounds about right. Yeah, so we'll see if she changed her mind. If we're still here, 4 o'clock this afternoon. A bit dubious whether anyone's going to be around. Anyway, right, let's move on from that. We'll look at the prices in more depth later. We did have a bit of data out the US yesterday. If I'm on the right page, where am I? Wednesday. Yeah, we're in Wednesday. So we've got continuing claims or initial jobless claims, which came in about 216,000, though continuing claims was sitting around that 1.9 mid section, 1.95, 1.96. So that's not moving at all. Durable goods, they came out okay. No real horror stories there. There was a bit of weakness in a couple of the components and a bit of strength in the others. So that was all right. This is all old September data, but it still will look at what was going on back then. I haven't had a rant about bank forecast for a while, so you're in for it today, folks. JP Morgan, 29th September, said they see the Fed cutting in October, December and January. A couple of weeks later, we got the NFP data out after the shutdown, where they changed their forecasts to not seeing a cut in December and the Fed staying on hold. Then they've had a few Fed heads pop up, and it's taken them 6 days to reverse that forecast back to cutting in December. So there's another lesson in why you shouldn't listen to bank forecasts because they change like the weather. Rent over. South Africa's in a bit of hot water with Mr. Trump. They will not be getting an invitation to the 2026 G20 meeting in Florida, I think it is, perhaps, according to Mr. Trump, because it all kicked off when they failed to hand over the presidency to the US at the last G20 shindig. He's also going to stop all payments and subsidies to South Africa effective immediately. Kay, I thought we might have seen a bigger reaction in dollar rand. It looks like we might have had a late wake up reaction this morning, but he's giving it to him.
Yeah, I know, and it's actually since the start, yeah, because we know that South Africa is part of the BRICS, and since the start is hammering onto them, but it's not as if rand traders are paying too much attention to what Trump says against South Africa. It had much more effect at the start, where he started to rant against them, but I guess the market just knows that they that after he didn't go to the G20 or didn't even send major representatives. But yeah, I mean, the market just shrugs its shoulders and carries on. He's also sent one Takeichi's way, right? Tell her to tone down
Yeah,
on Taiwan. I mean, that's taking a side enough.
yeah, yeah. I mean, the last thing we need is those two kicking off, Japan and China. But
Yeah, but yeah,
yeah,
but I
you
mean,
like to get involved.
I would have expected Trump saying, "I'm not." Everybody says what they want, but that is clearly picking a side, in my opinion.
Yeah, yeah. Well, let's hope plenty of turkey calms his turbines.
Yeah.
We shall see. Right, so that's it from that. We've got NAFL coming up this afternoon because obviously US markets are closed. But later on, we do have, overnight, we do have Tokyo CPI, which could be very important because that will be the next new numbers ahead of the December BOJ meeting. And that front runs the national CPI data, which comes a couple of weeks later. Looking for a little bit of a pullback, not much though, 2.7 from 2.8% previously in most of those measures. Get a bit of unemployment data out as well, or quite a bit of data out from Japan as well, industrial production and whatnot later. So that could be a bit of a mover while markets are a bit quiet, liquidity not its greatest. So keep an eye on that if there's a big variation to that. Certainly if these numbers are jumping up close to or above 3%, you could see the yen getting a bit of traction on that one. Apart from that, it's all quiet unless you fancy watching some Canada data, which I don't. Right, where shall we go? Let's have a look at dollar yen. As I said, it's becoming a bit of a tight one down here. We keep getting these moves under 156, but they again are not holding, and we're building a bit of support in this 70s, 80s area as well. So if this is going to continue, it's got to get through that level. And if we keep bouncing off that level, that puts a risk that we're going to see another bounce back up. Keep an eye on this 156, 50, 55 level. It was resisting. We had a break, came back under, started resisting again. So this could be a bit of a gateway to whether we go back up toward 157. But as you can see, we are still got this series of lower highs coming in, but we've halted the drop at the moment, so it's a bit in the mix here. The yen index that came in lower, 75.32 versus 75.61 yesterday, so that's not quite out the woods yet. Shows there's still a bit of yen weakness, broad yen weakness. So you need to keep an eye on that. But yeah, I think if we're breaking properly under this 155.70s, then we're probably going to have a look at 155. But yeah, it's a bit of a coin toss at the moment. You got any thoughts on this one, Kay?
Well, you know what? Yesterday, until I went to bed, I had a bid in at 155.80 and I took it out
Oh,
before before going to bed. Would have been a decent trade, just trading that prior low, but I didn't really know what the dollar was going to do really. Yeah, it's holding. And again, maybe just maybe dollar yen and yen crosses could move a bit differently, or dollar yen stalling, yen crosses, because the yen crosses are still beat, right? If you look at that euro yen, yeah, even the commodities yen, but that euro yen, it gives back a little bit, and then it just comes back higher, right?
it's
Still,
interesting, this one. If you compare it to dollar yen, we've had the similar move down, but this
yeah,
one's just creeping back up, whereas
yeah.
dollar yen is creeping down, which
Mm.
It's what we've been saying this week, that maybe we've switched more from the inside to trading the other side of the crosses.
Yeah, yeah, it's possible. But yeah, we also had a bit of a recovery from the lows in euro dollar as well. But yeah, I still have difficulties to be long yen, man. I mean, especially when I look at those crosses, right? People were asking me yesterday, "Oh, should we sell sterling yen on the back of the budget?" And I went like, "Oh, okay, if you want, if you want to have a few sleepless nights, go ahead."
They're less dangerous to go and play on the motorway.
Yeah. So yeah, I'm still not convinced the yen is going to strengthen materially. But again, if I would do anything in yen on the short side of the yen, I would do it via cross and not in the dollar yen, because I have limited confidence in the dollar going into year end, to be honest. 155 tomorrow, an intervention. Joao, I don't think so, mate. Unless the dollar drops severely against other currencies and the dollar yen hangs around here, which would push the yen index down, then we may see it despite dollar yen not moving much. But it's I don't think we're in real danger of immediate intervention. Famous last words, of course. This afternoon it's bingo, but no, I don't think so. Unless dollar yen shoots back up to 7-8 without, and then on the other side of the coin, if dollar yen would now start to ramp higher without the rest of the dollars um, um, really going higher, that may be the case. But right now, I'm no. Watch that yen index, mate. Then we may see we may have a better idea.
Yeah, I think on the pressure gauge we moved out of the red, but we're still in the yellow. I would
No,
say for
yeah.
that. Yeah, but it sounds like you're talking your book, my friend. In which case you'll probably be on the same side as me. Dimmy, Kiwi. That's going to be an interesting one. I've been short in this one, or I am short this one. God, it did nothing yesterday. It was just glued up at that one 14, 40, 50 area for all day yesterday. Um, Mr. Hawksby, the data has just given it a little bit of a shove down. There was some decent data out of Australia as well. Not huge data, but investment data, which was looking okay. So I don't think this is in a rush to go down. It held up at this area around this fib, these prior lows and whatnot, which technically is good. We got down close to that level around the big figure 114s, and we bounced from there. So nothing is a surprise at the moment. But we have got this minor. I might as well chuck a line in there. We have got this minor area coming in here now, which this bounce seems to be struggling into. So technically, it's moving in the right direction. Whether it's got the gumption to have a real move lower is another thing altogether. Kay, I know you'll be in Kiwi. Is this in dip buy mode, or should you be
Um,
worried if it
well,
goes down
I've
again?
actually let my kiwi go, but I'm on the other side of of the kiwi. Yesterday I was really tiny, and overnight I said I was going to buy around 114, and luckily I don't know whether it's luckily or not, but I got done. So because I think even though the data were pretty decent in Kiwi, I give the in Kiwi land, I give that, but the data in New Zealand, the capex were also pretty good. So I'm I think it's still looking like a correction to me, and I've got a few lines just around below 114, just the same one as you have there. If it goes down below there, I'm gone. But yeah, I'm seeing if we can bounce maybe a little bit. Yeah, but Kiwi has gone through that 95.05, and I really thought we would continue higher, but it stops in its traces again, and already down 20 pips from where we had. So we will see if this 56.9505 holds or not. Um, and Aussie is in the same vein. It's trading inside that 65.20.30, which I think is a bit key to go higher or just fail again. Yeah, you've got a bit of that zone a bit higher up. Yeah, I can see that as well. But if it would go above 65.5, then I think we're off to the races. But yeah, I mean both are again they putting in that move and then stop. Still not obvious. Still
Yeah,
not.
the wider trends are still in play. You know, this has been in a bit of a downtrend since that mid-September high. You know, still getting these potential lower highs as well when we're getting the lower lows. But you know, I don't think these are going to race anywhere quickly. How do you think these are going to fare going into the new year? Because everyone's going to be out, you know, with their new drawings and you know new expectations. Is this just going to continue, or could we see a flip around? You know, more central banks getting into neutral. Where do we go from that point?
Yeah. And I was thinking about this Aussie also yesterday. Assuming that we get a Fed cut in December, and just in the assumption that we get a cut. Aussie and the middle of the Fed funds band are going to be exactly at the same level, 360, if RBA doesn't do anything surprising. Um, and so it's going to be a complete data driven on strength of the economy, which beat me. I do not know what's going to happen to the U.S. economy in 2026. Everybody is again saying the too much funding, too much this, too much that. But if you look at the data, yes, the picture is weakening on the job site, and I think that's where we probably are going to see the biggest moves coming from. But where last year I had a pretty clear idea about what may happen this year. Looking forward, I think I'm going to have a lot of thinking to do in December to see what's going to happen in 2026. Put a gun to my head, I would say we trade a lower dollar, but I'm the conviction is far from strong.
Yeah. I'm in exactly the same boat. Yeah, I'm middle of the road. I'm going to pass the chart over anyway. But yeah, I'm middle of the road. What happens? The Fed, they could be entering another cutting spree if the data turns. If the data
Mm,
doesn't turn, it's going to be slow and steady.
yeah.
You
Yeah,
know,
imagine. Even we everybody knows about the cuts, right? In the jobs, etc. So somewhere a weaker jobs picture is the expectation. But I do think that if they pass a certain threshold in the unemployment rate, the market is still going to sell dollars, right? So even if the NFP stay around, I don't know, flat. Because the rest is creating a few jobs and but the government is losing them. It may be that the unemployment rate ticks up, with a
yeah,
participation rate, more people getting back into it but not finding jobs. That could tip the scale, but it's again it's too early to tell. I mean, all the how shall I say the doomsayers or the recession callers have been wrong for 3 years in a row now, 2023, 24, and 25. So
oh,
it's
hat
uh,
trick.
huh? It's a
They've got a
hat trick,
hat trick.
yeah, and a real one. It's a real hat trick. So yeah, we are going to need to be seeing data to really judge clearly what's going to be the theme for 2026. And let's not forget that we still have a US president, and Xi and Putin, they will still be there in 2026. And those guys
Midterms.
can
Yeah,
drive stuff around in whatever direction that we don't know yet. Okay. Right, just to have a quick look what happened, and that was happening last night in euro dollar. We had quick blip above this descending channel, met with sellers. It was looking like we could go, but we couldn't confirm above this 116.20. I think that's where it's really going to be at play. We're still in month-end scenario. The liquidity is not great. Um, I suspect and I hope for them that if people have like really large interest for month-end, some people they have done it before Thanksgiving because there might not be too much liquidity tomorrow. But in any case, we stopped around there, so that's going to be the level again. And again, I would say even if we get back above there, I'd wait for the 116, 15, 20 to go to say that we might be pushing a bit higher. In the meantime, I guess we're going to mooch around here, especially for the day, right? With the US being off, I don't see unless we get some kind of wacky headline, what's going to take it really too far away from where we are now. Um, have you looked at the cable or not?
Just a brief flick.
Yeah, no, I mean, forget it. There's we have to look at the metals because there's something interesting going on here. Gold has really, and until yesterday, I wasn't looking at this bigger triangle, by the way, but it's really been kept around that triangle. It does seem that even if it doesn't give up, um, this being bid. And we may break above 41.70, 75 at some stage. It does seems that there's a little bit less interest in gold right now, comparable to what's happening. And before I look at silver, look at what's happening in platinum. And I even didn't put any lines on there, but this is the move that we had since the start of the week. It's really, really, really gone pushing higher. And the better one for comparison is actually silver. I thought gold would be dragged higher as well on the bandwagon, but the one that's really been pushing higher is silver. We only had a brief look yesterday. We stopped around this 52, 15.30, but then it really pushed higher again overnight, and we are a buck away from the all-time highs. Okay, so um, supply. Don't forget that silver is a metal that's used in everything basically, including what I've already said. Unfortunately, warfare. If they need to replenish their arsenal of drones, they are going to use silver as well. Um, and it's really pushing higher. So we are getting back slowly, well, quite rapidly actually. We are about a buck away from those all-time highs. Okay, so watch out what's happening here, because if that would break, we could be on a quick run up to 56 or even 58. Okay, if you are a short-term trader and you want to lean against those highs. I'm not, because it broken this higher low pattern. But the support would be 52, 15.30. If it goes back down below, then we may see a bit of a retracement. But if for those who want to lean into this move, if we get a retest of that 52, 15.30 and it holds, the next move could be quite a bit higher. Just in case people are looking at silver. Um, yeah, the Kiwi. Yesterday, 95.05. I told you about this thing. We went above, but then again, we're gradually losing steam. We're trading around 57.10 right now. So I would still watch this 95.05. If it holds, we can continue to push higher. But if it fails, it's not going to look pretty good. And the Aussie similar thing, 65.20.30. One where I'm back in actually, and I'm just going to show it for info. This Euro Noki, I'm seeing Brent is pushing a bit higher again. Looks like we are going to fail and maybe being back below this 80, 80-82 zone. We may have seen a bit of a high here. Perhaps we are going to trade it a bit lower. In the dollar Norway, it also showed signs of exhausting through that channel, and it's already trading back below. Watch what's happening around 10, 15, 14, 16 in dollar Norway, because we are getting closer to that level. Okay, in case you want to trade it via the dollar. Ryan, I think we have shown enough, mate, for today.
Yep, thank you very much, mate. Not much else to do now, so Yanks are all on holiday. Expect markets to get a little bit quiet later on through the session if you're still about with us. If not, the likes of Bran, I don't know why you're here. You should be taking your holiday and having a little break, refresh the old noggin. So get your ass off and get your head in some turkey. Otherwise, thank you very much to everyone else for coming to the Flow Show. If you are from the US, do have a great holiday, great Thanksgiving, and our thanks to you for coming to the Flow Show. We will see you tomorrow. It'll probably be another quiet one because most of the Yanks will be taking a long weekend. Other than that, thank you, everybody. Have a great day. We'll see you tomorrow.